Learning is not rushing, not rattling through. Comprehend. Learn thoroughly. Study all aspects. Learning is the foundation of your professional career to come right along with you for a long time to come. So do our style of teaching. Hi students. We are going to look at current ratios, our today's topic. Before we go into our topic, let's first see what ratio is. Synonyms of ratio is the relationship in quantity, amount or size between two or more things. In another word, a ratio says how much of one thing there is compared to another thing. This is generally expressed as 2 to 1, or 2 is to 1, or 3 to 1, or 3 is to 1, etc. You would have seen in partnership accounts where profit sharing between partners A, B, C, and D is 4, 2, 1. This is partners' profit sharing ratios. Today we are going to learn about accounting ratios or financial ratios. These ratios are useful to understand, interpret, and analyze various financial information for the benefit of end users. These can be internal users or external users. Internal users are management team, employees, and owners, etc. External users are financial analysts, retail investors, creditors, competitors, tax authorities, regulatory authorities, and industry observers, etc. Accounting ratios are classified into broadly 4 categories: liquidity ratio, efficiency ratio, profitability ratio, and investment ratio. Current ratio will come under liquidity ratio. A liquidity or liquid asset means an asset that can easily be converted into cash in a short amount of time. Therefore, the current ratio is the relationship between current assets and current liabilities, or comparison between current assets and current liabilities is current ratio. By realizing or liquidating current assets, and with these funds, current liabilities are settled. So the two components needed for current ratio are current assets and current liabilities. What are current assets? Current assets are short-term assets that a company expects to use up, convert into cash, or sell within 1 year or one operating cycle. The current assets account can be found on a firm's balance sheet. Common examples of current assets accounts include the cash and cash equivalent accounts, cash balance, bank balances, and certificates of deposit, CDs. The accounts receivable account, this is money owed to the company for selling their products and services to their customers. The inventory account, goods produced and ready for sale or raw materials. The prepaid expenses account, goods or services paid for to be received in the near future. All current assets may not rank same on liquidity. Inventory is the least liquid asset, whereas cash is very high on liquidity. In the case of inventory, it has 3 steps. First, it will have to be converted into trade receivable by selling. Then it has to be collected from trade receivable for it to become cash. Then cash can be used instantly. In the case of accounts receivable, it has 2 steps. First, it has to be collected from trade receivable for it to become cash. Then cash can be used instantly. Cash, of course, can be used instantly as it is available readily.
Now let's look at current liabilities. What are current liabilities? Current liabilities are a company's short-term financial obligations. Bills that are due within 1 year or within a normal operating cycle. Examples of current liabilities include accounts payable, short-term debts, accrued expenses, dividends payable, interest payable, etc., on a normal course of business. Order in which liabilities are paid will depend on the terms that are agreed with the provider of service or goods. Example 1. Current assets $60,000. Current liabilities $30,000. Current ratio is 60,000 divided by 30,000, 2 to 1. Example 2. Current liabilities 30,000. Current assets 60,000. Current ratio is 30,000 divided by 60,000.5 is to 1. What do we understand from the above example? Yes. Current liabilities are covered 2 times by current assets. How one may interpret the above examples. Positive side. Payment obligation are well covered. Healthy situation. No liquidity pressure. The market will willingly extend credit. Can bargain better prices from the marketplace. Negative side. Funds not utilized productively. Overcautious. Dear students, any ratios as stand-alone one may provide only a limited meaning. In order to get more useful information, current ratios may be compared with 1. Current ratios of a selected company, namely that of a close competitor. 2. Industrial norms. How your current ratio fared with similar businesses or businesses similar size or the practices in the region. 3. Period to period. Your current ratio is compared with your past performance and assess improvement or deterioration. What does current ratio indicate? The current ratio indicates the ability of a business to meet its current obligation and the extent to which the organization-owned funds are used to finance current assets. The adequacy of the current ratio depends upon a number of factors such as 1. Type and credit rating of the business. 2. The terms of buying and selling. 3. Turnover of debtors and stocks. For the maturity dates of current obligations and 5. Whether the business is expanding or contracting. Now let's look at some MCQs. Calculate current ratio from C following information. Cash 10,000. Accounts receivable 30,000. Inventory 80,000. Prepaid insurance 6,000. Long-term assets 200,000. Accounts payable 30,000. Notes payable due in 10 months 25,000. Wages payable 5,000. Long-term liabilities 70,000. Stockholders, owners, equity 196,000. Answers: A. 1:1B, 2:1C, 2.1:1. Dear students, as you have noted, the above information includes accounts relevant to current ratio and which are non-relevant to current ratio, and therefore you will have to take only the relevant information out. Take the current assets and current liabilities separately and compare them with each other. Current assets. Cash 10,000. Accounts receivable 30,000. Inventory 80,000. Prepaid insurance 6,000. Total 126,000. Current liabilities. Accounts payable 30,000. Notes payable due in 10 months 25,000. Wages payable 5,000. Total 60,000. As you would note, long-term assets, long-term liabilities, stockholders' equity are not taken into account. Therefore, the current assets 126,000. The current liabilities 60,000. Will give a ratio of 2.1:1. Therefore the answer is C. Okay, now let's look at another question. Balance sheets as at July 31, 2002, July 31, 2003. Fixed assets 135. Current assets stock 6,105. Debtors 3085. Bank 3,125 195. Current liabilities less creditors 60 150. Working capital 6045. Total assets 160 180. Financed by capital 150 160. Profit 2040. 170 200. Drawings 10 20. Total liabilities 160 180. 1. Calculate current ratio for each period. 2. Compare ratios of each period.
Okay, in order to answer the question we have to take only the current assets and current liabilities separately. Current assets, stock 60,105. Debtors, 30,85. Bank, 30,125,195. Current liabilities, 60,150. In the first period, compare the current assets with current liabilities. Okay, that is 120 is to 60 will give ratio of 2 is to 1. In the second period, compare the current assets with current liabilities. Okay, that is 195 is to 150 will give ratio of 1.3 is to 1. Answer, therefore is ratio of 2 is to 1 and ratio of 1.3 is to 1. Now let's look at the second part of the question. Stock has increased by 75% from period 1 to period 2. May refer to overstocking, reduction in stock turnover, slow-moving stock, more funds engaged in less liquid assets. Debtors increased by nearly 200% from period 1 to period 2. May indicate poor debt collection, bad debts or debts overdue. Bank balances have reduced to almost 17% from one period to another period. May indicate difficulty to settle creditors and other payments. Creditors have increased from 60 to 150, that is an increase of 150%. May indicate overdue credit settlement. Ambitious purchase pattern. May indicate overall unhealthy current ratio. Okay students, we end this session for the time being. If you have enjoyed the video, please subscribe, like, share. We have more than 30 videos in our YouTube channel and many more are to come in next few days. Keep following us. Our YouTube address is SL Accounts School. SL Accounts School. Thank you.